Hello everyone, I'm Jerry D'Ambrosio and it's my pleasure to bring to you this week's special presentation, A Stock Investor's Daily Path to Profit. Stock trading and investing can be intense, but having a solid daily routine can set you up for success. Today we're going to break down what a stock trader's day should look like to stay on top of the market, make smart decisions, and manage your time effectively. Now, this is a very methodical, step-by-step routine. The first step is to watch the daily color guard report or consult the color guard each day to identify market direction. The single most important consideration that we need to make is whether the market is going up or down. Okay, whether the trend is up or whether the trend is down. You can do this either at night or early the next morning, but it is important to identify the trend and what our guidance is each and every day. So from the investor community room, you all have access to this room. Hopefully you've gotten in here and been able to watch our daily color guard reports live. We do them at 3:55 p.m. Eastern Time, and you can watch the recordings immediately after the session is done right here from the community room. So you click on the little hamburger button at the upper left, go to archives and then recordings, and you'll be able to watch the recording pretty much immediately. We'd love for you to join us live. If you can't though, the recording is available. It's also available within VectorVest 7. So on the home page, somewhere here it says strategy, the strategy gadget. You can watch the daily color guard report within the program as well. We upload it about 6 or 7 p.m. Eastern Time daily. What we do in these daily color guard reports is just keep you abreast of what's going on with the market and what our guidance is each and every day. So for example, as of the close of yesterday, this is February 6th here, you can see we have a red light in the price column. The RT combo signal is bearish. RT is below 1, buy to sell ratio below 1, MTI below 1. We're in a confirmed down signal. Both the short-term trend and the underlying trend is down. Our guidance is pretty straightforward. VectorVest does not advocate buying any stocks at this time. So you know that the next day, today is Friday, February 7th, today is not a day that you're going to take on a new bullish position, a new long position in your portfolio. If you are a little bit more aggressive, you may be considering playing the market to the downside at this point. Inverse ETFs, short stock positions, bearish option trades. What we're doing is we're identifying the market's direction and establishing a directional bias. In the daily color guard reports, we also go through key indicators or situations that we might be seeing on a market timing graph. So if I go into graphs, let's just look at a market timing graph over the last year. We have a little head and shoulders pattern forming on the VectorVest composite. It has bearish implications. You have the neckline of the head and shoulder, the left shoulder, the head, the right shoulder. So it's forming now in real time. We're kind of seeing this develop in real time. We'll pass that along. Make sure you guys are aware of what's going on here. If the VectorVest composite is retracing from support, I think that's a noteworthy situation, a noteworthy condition that you should know about. If the buy to sell ratio is below 0.20 and the MTI is below 0.60, those are noteworthy conditions that we want to let you know about. Okay, so it's very important to keep abreast of the market, make sure you're trading in tune with the market's direction, and at the end, you will understand whether the trend is up or down, whether the trend is strengthening or weakening. That could be either an uptrend or a downtrend. And that's very important. Your first consideration is to identify a directional bias. Step number 2 is do your homework. Once a directional bias is established, create a watch list of potential trades the night before. This can also be done in the morning if you have the time, but it can be done the night before. Our guidance for the next day is always going to be based on the trend of the market. So after the market closes, our data is updated, the guidance is there. That gives you a plan of action, a plan of attack for the next day. Once a directional bias is established, you're going to create a watch list. Now, there are many different stock selection methods within VectorVest, and I'm not going to go through them all here today. But as time goes by, you will feel comfortable, a little bit more comfortable with certain strategies. Maybe it's the NPI. Maybe it's top VST stocks in the S&P 500 watch list, or top CI stocks in the S&P 500 watch list. Maybe it's the Midas touch. There are a lot of different stock selection techniques that you can utilize. I've gotten this question in our swing trading coaching group recently because we've had an influx of new members since our Tampa 2-day investment seminar. The question is, you have these different strategies that we use, and in the swing trading group we use strategies like the Holy Grail, EMA squeeze. Those are two techniques that I actually taught in Tampa. We have the MPI that we use and some others, and the question was, which one do I use? And my answer to that is utilize them all. You don't necessarily use them all on a daily basis, but you have them at your disposal. If you don't see any really strong NPI candidates on a given day, maybe you move on to a different technique, and you're creating this watch list of stocks that you might trade the next day based on these different techniques that you feel comfortable with. In our swing trading group, we use the Holy Grail, we use the EMA squeeze. I'll look at some Holy Grail candidates, I'll look at some EMA squeeze candidates, I'll look at NPI candidates, and maybe I'll find a few from each, and that'll be my pool that I'm focusing on the next day. Once you do that, once you create that watch list, you're going to prepare to trade. Check the futures in the morning for added confirmation of your directional bias. The market generally opens in the direction indicated by the futures. I like to go to investing.com. There's a few different sites that you can go to for real-time stock futures. You can throw on CNBC as well. I know they have them there as well. I'm on my computer, so I like to go to investing.com. You could see the real-time futures here. It's still early, only about 6:45 a.m. Eastern Time. The futures are mixed. The Dow is up 42. The S&P is flat. The NASDAQ here down only about 5 points. Russell 2000 up a little bit, but flat as well. Take a look at the VIX, the S&P 500 Volatility Index. It's down a little bit. You can take a look at global markets as well. These markets are already in session. The DAX, which is the German stock exchange, flat. CAC 40, that's the French stock exchange, up about 0.25%. The FTSE 100, that's the London stock exchange, flat. So a rather muted day so far. It is Friday, so we'll see how this plays out. But remember, our directional bias as of the close of yesterday was down. It was bearish. We're not really looking for bullish stock candidates here today. It would only be inverse ETFs, bearish short positions. Now, if the market doesn't follow through, and that's one of the next steps which we'll get to, then today might be a day where you don't do anything. While you're here, check for any news or economic reports that might be coming out today. Keep an eye on any major events that could move the market, and any earnings reports. Amazon did report earnings after the bell yesterday. Looks like they had a good quarter, but their forward guidance was kind of weak. Stock is selling off a little bit today. Any economic data releases. What I'll do is I'll click on Tools at the top, go to Economic Calendar, and this will tell us if there are any events here, any news, economic reports that are coming out. You could see payroll data, so some jobs reports coming out. Non-farm payrolls at 8:30. Unemployment rate at 8:30. These are reports that are going to come out before the market opens, so we'll get a better sense of what type of day we might be in for after 8:30 this morning, after these reports come out. News is your friend and can help you anticipate big moves. So that's part of your pre-market analysis. Step number 4 is wait for confirmation. If you're able to watch the market open, wait until about 10 a.m. and be sure the market is still moving in your direction. The first 30 minutes can be volatile, so it's important to stay calm and focused at this point. For midnight cowboys, you're going to use what's called a buy, sell, stop limit order to enter trades. If you can't watch the market during the day, your only option is to place your orders on trades that you're interested in, investments that you're interested in, the night before or early the next morning. So, for example, if I go into the program again, let me just go into the viewers. This is one stock selection system or method that I like. I like going into the S&P 500, sorting by comfort index, looking at the top stocks in that watch list ranked by CI. Comfort Index is a great indicator. It looks at long-term price performance. You might have heard of the Ulcer Index. The Ulcer Index rises the more and the further a stock price falls. The Comfort Index rises the more and the further a stock price rises. So we're going to really like the charts here on these top CI stocks. HWM, great looking earnings per share. RT is above 1. Stock's just coming off of a 52-week high, about to make another one. Above our stop price. It has a buy rating. Recent little softening here and a potential breakout. So if I like this trade for today, and again, today is not a day that we're going to buy stocks because the trend is down and our bias is bearish, I would say, well, stock closed at 129 yesterday. I want to make sure it goes up today. I want to make sure it follows through. I may put in a buy stop limit order at 129.12. An eighth of a point, 12 cents higher than the close of today. 129.12 would be your buy stop price, and your limit price might be about 50 cents higher than that, 129.62. What you're saying with that order is you're okay with any price in between. Trade won't fill or execute. You won't take that trade unless price continues to move higher. So if you're placing this order the night before, you have no idea what the market's going to do the next day. You have no idea what the stock is going to do the next day, but you're ensuring that you're only going to take the investment if price continues to move higher. And that's a great order to place, buy stop limit order. You'd use a sell stop limit order if you were looking to take a bearish trade. Okay, and then finally, place your trades. Consult that watch list to determine which trades you will place. You're going to buy rising stocks in rising markets. You're going to short falling stocks in falling markets. Make sure you're setting your entries. You understand where your confirmation levels are and where your exit points are. Decide on stop loss levels before you take the trade. Having a clear plan helps you stay disciplined and avoid emotional trading. Always stick to the 1 to 2% rule. You never want to risk more than 1 to 2% of your overall portfolio value on any one trade. You can determine what your cost basis is by having that front and center with every investment that you take. And all the while, you're still monitoring your current portfolio and the positions in that portfolio. And just rinse and repeat. This lays out a nice routine, very structured, checks all the boxes so that you stay disciplined, avoid emotional decision making, and that's your path to long-term success. Thank you, folks. Hope you guys enjoyed today's special presentation. Put this in place starting next week. I think you'll have a much more structured, organized trading day. Take care, everybody. Have a great weekend. We'll see everybody next week.